we can't always control what happens as far as like the number of clients that come in. Yes, we can do great marketing, but we can't control and we can't make people want to hire us as a law firm. And so if we do that stress test and we can start to see, all right, is revenue the issue here? And then what I like to do is we like to go through the expenses. What if we, say that, hey, revenue is gonna stay about, where it has been. The average revenue is gonna stay consistent. What if we increase certain expenses by 20%? And let's see, can the business handle expenses going up by 20%? Every law firm should go through what I call a financial stress test. And the point of this stress test is for you to understand what are the limitations of your business. Can you stretch beyond a certain point? Now, if you've never done a stress test or financial stress test for your business, I will tell you, you are probably underestimating where you have weaknesses in your law firm. Now, I've gone through this from a physical standpoint as well as from a financial standpoint. And from the physical standpoint, I grew up with a heart murmur, and it was so bad that at one point when I was 14, the doctor said, hey, I cannot clear you to play sports, because I played soccer and football. And the doctor said, hey, I'm concerned that if you get on the field, that you could possibly collapse and die on the field. And so I had to sit out of sports for an entire year. And in order to prove that I was able to do sports again, I had to go through a series of stress tests. Now, if you've never done a physical stress test, I'll explain the process or how it may work. Is what their goal is to hook your body up to all of these electrodes and these wires and these tubes. And what they are going to do is they are going to push and push your body, because they're trying to see, how does your body respond under pressure? How does your body respond? How does your heart rate respond? And what they want to know is, can your body handle the stress of the activity that you are going to participate in? And I think that every law firm should do this financially for their business, because one of the worst things that you could do is to make a financial decision in your law firm and then on the back end find out that, hey, this was too much for our firm to handle. And so here are a couple of tips that I would share with every law firm to make sure that you can do your stress test and to make sure that you are not stretching your firm further than it should go. So here's the first thing that I would say is, what we want to do is we want to start with your profit and loss statement. Let's start with revenue. Now, if we look at revenue, which is at the top of your P&L or your profit and loss or your income statement, whatever name you know it by, if we look at that revenue number, the first thing that I want to ask is, what would happen if your revenue decreased by 20%? What would happen to your business? If we did the math and we said, okay, here's what your firm usually produces, and if we dropped your revenue by 20%, is financially, what does that do to the rest of your business? Can you afford to stay alive? Or how long would you be able to operate if you actually reduce your revenue by 20%? Now, the reason why we pick 20% is because the truth is, like, we can't always control what happens as far as the number of clients that come in. Yes, we can do great marketing, but we can't control and we can't make people want to hire us as a law firm. And so if we do that stress test and we can start to see, all right, is revenue the issue here? And then what I like to do is we like to go through the expenses and we say, okay, all right, what if we say that, hey, revenue is going to stay about where it has been. The average revenue is going to stay consistent. What if we increase certain expenses by 20%? And let's see, can the business handle expenses going up by 20%? So let's say, for example, if your software, because what we do know is software prices don't go down every year. Every year, most software vendors are going to raise prices. Also, we look at things like your payroll costs, and we say that, hey, if we have to give a raise to our employees, because hey, most employees expect a raise every year. So if we ran those numbers, we did that. And then we looked and said, hey, what if rent prices go up? Because, hey, what if the landlord raises the rent on the office that you're in? When we start to run these scenarios and we start seeing, hey, here's all these different places where cost is going to go up, then we ask ourselves, at the current revenue level, can your business support that? And what we often find is for many firms is the current revenue that they're operating at, if those costs go up, they will not be able to sustain it. And so we start to really explore, okay, all right, what does this mean? Now that we've done this stress test, we've said, hey, what happens if revenue goes down, or what happens if costs go up? And then we can look at a scenario and say, what happens if both things happen? Revenue goes down and costs go up. What does that do to the business? Like, how much cash do we have on hand to be able to make it through a downward cycle before we got to make some drastic changes? And when you start looking at your business that way, you can start to identify what are the things that our business is not prepared for. And then what we do is we start to look at things like your cash flow, and we say that, hey, what if customers take 5 more days to actually pay you? So if we look at what your current collection process is, and we say, okay, all right, how long does it take people to actually pay your firm? Like, how long does it take those customers to pay their invoices? What if that gets delayed by 5 days? And then what we do is we start running cash flow projections to say, okay, if customers are taking 5 additional days to pay you, what does that do to your cash flow? Are you going to see this roller coaster effect, or is your business going to run out of cash if people start taking longer to actually pay you? And I will say that is another reason why you should definitely go back and watch the video we did last week where we talked about having a cash flow system in place, because what a lot of firms start to recognize is that when things are going on in the economy, like when people are uncertain about the economy, what tends to happen is they take a little bit longer to pay their invoices. And what most firms don't realize is that you may only be 5 or 10 days away from actually being bankrupt in your firm. So you want to run these type of stress tests to actually understand, where are the weaknesses? Is it a revenue weakness? Is it an expense weakness? Is it a cash flow weakness in our business? Because if you can set up those type of processes and you can actually run those tests within your firm, you then can get ahead of it and say, hey, if we know that our issue is a revenue issue, now we need to go to our marketing process and our sales process, and we need to examine and understand, what do we need to change, or what adjustments do we need to make when it comes down to our sales and our marketing to make sure that we can support the revenue that we need for our firm to be healthy. And then if it's an expense problem, then maybe it is, hey, we need to really assess where can we have some optimization of our expenses. Now, I will say next week, I'm going to be doing a video where I'm going to be going in detail about how firms can effectively look at ways of cutting costs without hurting the firm. So you definitely want to check that one out. And then the third one I would say is you want to run a cash flow stress test, because you want to understand, like, what are the number of days that we can tolerate for our cash flow to be down before this runs into a very big problem. Now, if you've never done a financial stress test on your firm, I think it is very highly recommended to work with a CFO who understands the financial strategy of a law firm to be able to do a stress test. Because if you run this stress test, you will be more clarity about where the weaknesses are in your business. Now, you can probably easily run the stress test on revenue and the stress test on expenses, but when it comes down to the cash flow, you do need to do a little bit more calculation. It is a little bit more involved for you to really understand, like, where is our breaking point as a cash flow? Because once you identify that, then you can set the proper rules in place to make sure that, hey, we do not run into a financial health issue in our law firm, because we've done the stress test and we know what our limits are. So we know what processes and procedures we need to have in place to keep us from reaching that breaking point. Thank you for tuning in to another episode of the Law Firm and Finance Show, where we give you great content that helps you build a more successful law firm. So make sure you hit that subscribe button on all platforms and follow us for more content.